Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me Shail Bhatnagar. Well, exactly a month ago, the Nifty had made its record high level of 26,277 and that was on September 27th. We're sitting on October 28th and since the all-time highs, the Nifty is down over 8%. Since then, the index has not reported any weekly advance and nor has it seen any kind of move back to those all-time high levels. And as of closing on Friday, the Nifty is down, like I said, 2,000 points from all those levels and is now on the verge of breaking this 24,000 mark on the downside as well. Friday also marked the fourth straight weekly loss for the Nifty, and the bigger worry has actually come in for the broader markets in the sell-off that have been seen in the mid and the small caps, especially the mid caps, which have now entered, the correction zone, down 10% from their all-time high levels as well. So that's again something which is not being seen as palatable by all the investors of the stock markets. And what we've also seen is that investors have lost close to 40 lakh crore rupees since the all-time high levels till the time now as well. Foreign institutional investors have sold over 1 lakh crore rupees worth of stocks in the Indian markets as well. The mood is pretty somber, but as we move into the Diwali week, we hope that some cheer can at least get back onto the D Street. Good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen. We start a fresh week which is both truncated. Friday you will have Muhurat trading, and of course you have the monthly expiry of the FNO on October 31st. A very, very painful month so far. You are down about 8% on the Nifty, and losses on many other indices such as the CPSE ETF are about 20-21%. This is the worst month since COVID of 2020, and things possibly are looking to ease out on the long side. Let's look at the good parts of the market and then look at painful parts as well. Now, the good parts are, ladies and gentlemen, that crude oil futures are now down to $76 a barrel, down 4% after the Israeli strike on Iran, which was limited to military targets. So the globe has heaved a sigh of relief. Gift Nifty is up, crude prices are down, and of course you have a very strong earnings show by ICICI Bank. These are the positives as far as markets are concerned, which has slipped dramatically. So Nifty is at 6th August close. Nifty mid cap index is at 18th June lows, and you have similar falls in the CPSE ETF, in the PSU ETF, in the defense counters. All of them have declined substantially. So these are the few positives that I see in the markets that are there, and of course you will see some kind of support coming in at around 100 DMA, at which the Nifty is in, primarily by ICICI Bank, whose earnings were phenomenal. With that background in mind, ladies and gentlemen, let's now examine the negatives for wounded bulls on Dalal Street. 1. The US 10-year yield is rising and rising at 4.23%. It is now the highest since early July. Dollar index shows no signs of abating because all of US funds are being pulled out of emerging markets and are going into the US economy. Dollar index is now at 104.5, which is the highest since 31st of July. So these are the two negatives, and these are two major negatives that we see. You'll be seeing all these on the charts which are there in front of you. Now look at the weekly chart of the Nifty mid cap index. The sell-off here is accelerating. This index is much below the 100-day moving average and shows signs of pain. Today is also the expiry of the mid cap select Nifty and the BankX on the Sensex. So these are 4 or 5 major events, but let's now dig deeper into individual stocks. ICICI Bank will be the cornerstone of Bank Nifty, which is now performing better than the Nifty. Second quarter profit was up 15%. Net interest income rose 20%. Gross NPAs and net NPAs fell, and this is all very positive. Look at the chart that is there. Most likely you will see a gap up on ICICI Bank, and that gap up should be maintained. So for this positive, I have two negatives as far as the banking sector is concerned. IDFC Bank has come up with a disastrous set of numbers. Remember the toll waiver that happened in Maharashtra ahead of the elections? Well, IDFC First Bank used to finance that company that used to collect toll. Now, of course, the bank, Maharashtra government will offset the losses that have been made by IDFC First Bank, but IDFC First Bank has already made provisions to the extent of 230 crore rupees, and that's why you see a very sharp fall in second quarter profit. Two interesting things will happen. Reliance Industries will go ex bonus today. A 1:1 adjustment will happen. The stock has corrected 17% from its all-time high over the last 3 months, and this should be an interesting stock to look at. Remember, Reliance Industries is the second highest weighted counter in the Nifty. A drop in price is most likely to attract new buyers into the counter. Dr. Reddy's will adjust for a 5-for-1 stock split, so keep these two stocks in mind. Again, as I said, this is the best time to put in a very good strategy to buy beaten down Nifty. Look at the SBI Nifty ETF. I am also doing the same, buying it on declines, and I will continue to do so till the time Nifty settles and shows a weekly gain. Apart from that, traders are advised not to take deep positions on the long side. We just might see a gap up. Let us see for how long this gap up sustains, and more importantly, if we close near the day's high of the Nifty, then possibly all the pain that we have seen so far seems to have been absorbed. Again, a very high earnings day today. Two companies from the Nifty, Bharti Airtel and Sun Pharma, both till recently were at record highs, will be reporting their second quarter earnings, and there are 7 stocks from the F&O space, including Ambuja Cement, BHEL, Federal Bank, Indraprasth Gas and LIC Housing, among them reporting their second quarter earnings. FI numbers are negative. Sakshi mentioned them. Let's just hear her and find out what's happening on Wall Street, where the Nasdaq has hit a record high. Sakshi.
Absolutely, Shail. So the Wall Street did end on a mixed note. It was the Dow Jones average and the S&P 500 that ended lower in trade, but it was the Nasdaq that was outshining everybody else. It ended higher by almost 0.6%, and of course record highs being seen. This is on the basis that Nvidia has become the world's most valuable company now on Friday, beating Apple following a record-setting rally in the stock powered by insatiable demand for specialized artificial intelligence chips, and that led to a powering session on Nasdaq. What we'll also see is that US election developments will be in the headlines now throughout this week. So we'll be tracking that as well in the US markets. Tracking US, we saw that the Asian markets also traded in the mixed trade right in the morning zone as well. So when we look at the last count, Japan's Nikkei was up about 1.5% higher in trade. We did see the Kospi up by 0.7%. The Hang Seng is mildly lower in trade, about 0.1% lower, and the Chinese composite index is up by about 0.2% in trade. The Gift Nifty is definitely indicating a positive start. We hope that it sustains. About 0.4% of an uptick can be seen. 24,250 on the Nifty is what is getting indicated at as well. Now, as I said, overseas investors have remained net sellers of the Indian equities market for the 20th consecutive session as of Friday. Domestic institutional investors remain buyers for 24th straight session. So FPI has offloaded stocks worth 3,036 crores. Domestic institutional investors bought stocks worth about 4,159 odd crore rupees. So that's as far as the FI and the DI equation is concerned. A lot of stocks that we should be keeping an eye out on the back of earnings. Bandhan Bank reported its numbers. Net profit up 30% at 937 crores. NII up 21%. Gross NPA slightly higher sequentially at 4.6%. Net NPA up by 1.2% odd. Interglobe Aviation is another one that you should look at here. The revenues improved by 14% at 16,970 crores. But this was lower than what the estimates were there on the street. EBITDA was down by about 0.5% at 2434 odd crore rupees. Margins came in lower at 14.3%, and there was also a net loss reported at 987 crores versus a profit of 189 odd crore rupees. So there could be some dent already. The stock has lost about 5% this week so far. Bank of Baroda, NII up 7% 11,622 crores. Net profit at 23% higher, 5,238 odd crore rupees. This is higher than the street's estimates. Gross NPA came in at 2.5% versus 2.8%. Net NPA also improved slightly, 2.6% on a sequential basis. ICRA came out with its numbers. Total income jumped 21% nearly at 146 crores. Net profit improved by 15.5% to 37 odd crore rupees. UTI Asset Management has reported good set of numbers. Total income up 33% at 540 crores. Net profit up 44% at 263 odd crore rupees. Torrent Pharma came out with the consolidated YOY numbers. Revenue improved by nearly 9%, and the net profit improved by 17.3% at 453 odd crore rupees. Inox Wind and Inox Wind Energy both reported good set of numbers. Revenue up for Inox Wind 97% higher at 732 crores. Net profit also at 90 crores versus a loss of 29 crore rupees. So that's a positive that came in. For the energy business, again, we've actually seen the margins improve, to 22.7% versus 7.3%, and the net profit coming in at 85 crores versus a loss of 57 odd crore rupees. For Credit Access Grameen, we have seen in Q2 standalone numbers show total income surge of 17% at 1,454 odd crore rupees, but the net profit was sharply lower by 47% at 185 odd crore rupees. So the company could be reacting to that one in the stock markets today. Praj Industries revenue down by 7.5% to 816 crores, and the net profit also came in lower by 14% to 54 odd crore rupees. We've seen GMR Airports Infra, GMR Power, I beg your pardon. Here the consolidated YOY numbers show that the revenue improved by 120%, and this came in at 1384 odd crore rupees, and the net profit improved by 23% at 250 odd crore rupees. Coal India came out with the consolidated YOY numbers. Revenue here came down by almost 6.5%. Profit declined by 22%, also at 6,272 odd crore rupees. From the real estate pack, DLF, keep an eye out on that one. Consolidated numbers show sharp improvement on the top line, 46.5% higher at 1975 crores. Net profit up 122% nearly at 1381 odd crore rupees. So great set of numbers coming in for that one too. Let's look at a few brokerage houses reports too. CLSA has come out with a buy rating and outperform call on ICICI Bank with a target of 1600. It believes the bank has delivered yet another steady quarter. Balance sheet growth has remained in mid-teens, while NIMs have moderated subsequently, sequentially as well. But definitely we have seen they have grown faster than the NII growth, driven by operating leverage. NII is expected to play out over the course of the next 1 year as well, is what they believe, and therefore they have an outperform rating on this one. Goldman Sachs has come out with a report on Indigo, a buy call, but the target price has been slashed to 4,800 on the back of slightly weaker than estimated earnings that have come in for the company, which we have already reiterated for you. For REC, CLSA has an outperform call with a target price of 680. They believe Q2 net profit was well ahead of estimates, mainly due to the negative credit cost ECL provision coverage on stage 3, which was down 3.5%, and they believe the company is poised to continue to grow over the next 3 years and loan growth is estimated at 16 to 17% over the next 3 years as well. On HPCL, Citi has a buy call at a target price of 420. It believes it's a subdued quarter two with EBITDA was below estimates. Miss in Q2 was account of multiple factors right there, but it has continued with the buy call on that front. On Credit Access Grameen, CLSA has a downgrade to hold and the target price that's slashed to half almost from 1800 earlier to 910 rupees now. This is after sharp decline in the earnings that have been reported by the company. So those are some of the reports that we'll be keeping an eye out on, Shail.
Ladies and gentlemen, Mr. Amit Khurana, Head of Equities at Daulat Capital, is the guest of honor today. A very warm welcome, Amitji, and what a pleasure to be back in touch after so many years. It's a pleasure to host you, sir, at a time when a lot of volatility is afflicting the Lal Street. Daulat Capital is amongst the top algo traders in the market. So we'll also try and find out how the business will change post November 20th, but that's a little later. But tell us, how do you feel sentiment is on Dalal Street after the Israeli strikes on Iran and the fact that crude oil has trimmed, but strong gains in both the US 10-year yield and the dollar index?
Sure. Thank you. Glad to be kind of reconnected, so to say. Been a long time. So, big picture market, I think corrections were expected. We were expecting that starting July, August, but it took its own sweet time. I think a lot many reasons why this correction was much needed to reset the expectations, reset the returns expectations and valuations, which were looking pretty rich and quite out of the range in lot many sectors. Having said that, the earnings season has really not been very strong. Not that we expected a very strong earnings season per se, but I think the guidance and the way the numbers are working out, it's turning out to be so far, shall I say, a disappointing season. But the hopes are there for second half. Most of the guidance from the management commentaries seem to suggest a much better H2 sort of trajectory for earnings. And that I think will be a helpful factor to find bottom on the broader indices, on the broader stocks over the next few weeks. My sense is that maybe give another, between let's say 5 to 8% of the index, we should possibly find some supports. And on the individual stocks and sectors, we're already beginning to see some of the stocks now looking interesting. While we've had overall more downgrades on earnings on our FY26 projections than upgrades. But we also find an interesting evidence wherein we are also now seeing ratings getting upgraded for our coverage universe much more proactively because the corrections have been pretty sharp in some of these stocks. So all in all, I think stay alert, stay realistic, and watch out for opportunities wherein the risk return profiles match and accordingly build your positions is what the stand we are making from now onwards.
Very good morning to you, Mr. Khurana. Sakshi this side. I wanted to begin my understanding from you. Is the 8.5% correction on the benchmark, is that good enough to see that, we could now perhaps look at a bounce back sooner or later? Or is there going to be much more to go? And how are you really looking at the mid caps which are now, which have entered into the correction zone, 10% down? Is most of the froth over there?
Well, two parts to your question. One, index I think is a very deceptive way to look at it because index has hardly corrected in that sense. I mean, we're up almost 37-38% in the last 18 months. So 7-8% corrections are par for the course. And remember, we haven't had a double-digit correction on the Nifty for the last 18 months odd. I'm excluding the June 4th election reaction to this because it was very temporary. So as I said, maybe another 5 to 8% on the Nifty can be a real possibility. And that should bring it to a reasonable level of support because the Nifty valuation will also start looking reasonable at that stage. Having said that, we also have to keep in mind what sort of overall earnings cut we get to by the end of the earnings season. Remember, we started disappointing. Hopefully, we should taper off. And if the cuts are not as sharp, then obviously Nifty will find some support at lower levels. On the mid caps, I think some of the mid caps have corrected much sharper than the double digit numbers. In some cases, we even see 25-30% corrections. But these are cases wherein you had seen a doubling, tripling, even quadrupling of the stock prices, and valuations had gone through some very unrealistic levels, which were not sustainable anyways. But as you know, markets always have their own extremes, and this was one extreme that we were observing from July onwards, wherein everything was being just lapped up, liquidity was extremely supportive, and those reality checks had to play out. They are playing out. So while there are pockets of sectors that we find interesting to start looking at, but have we started advising to go all out to allocate money? No, not at this stage. I would still probably wait and watch. Value corrections may have taken place in lot many stocks, but I think the time correction is something that you have to now build up for the next 3 to 6 months and use that time period to allocate weightages accordingly.
Right. Amitji, in the universe that Daulat Capital tracks, which are the stocks which have so far given better than expected earnings but have still fallen because of the correction in the market? One would presume that they would be on the top of your radar on terms of buying this dip.
Well, yeah, very few and far pockets in between. I think they're very individual stocks. For example, pharma seems to be doing reasonably well so far. IT, for that matter, while we've been cautious and on the more the negative side of IT, some of the pockets have been
Yes.
reasonably okay. And that also feeds into our hypothesis that IT and pharma were two sectors that we were calling out as potential outperformers if the markets were to take a corrective. Uh, Other than that, I think it's extremely bottoms up. And that's been our theme for the last 6 months odd, that this market eventually has to go bottoms up. So, for example, in banking sector, while we find some of the mid-sized banks reporting pretty muted earnings and even negative earnings, but we had, for example, City Union Bank reporting pretty reasonable performance, and the guidance was pretty reasonable. So that falls into our scheme of things, wherein we have upgraded to a buy. And similarly, you have individual names across the sectors which are becoming more and more interesting, so to say.
Okay.
We have the pre-open upon us, 185 points higher, 24,362. Now let's hope this pre-open gap up is retained. I want to see what ICICI Bank is doing. Ladies and gentlemen, we just might have a record high on ICICI Bank today. 62 rupees higher, 1318. The record high I think is 1350. Let us see what it happens, 5% higher. We'll also take a look at what Reliance is doing. Remember, this is now the readjusted price post the 1:1 bonus. 1340, 12 rupees higher. Will a 50% cut in price sort of attract retail investors back into the counter? Only time will tell. It has already corrected fairly sharply. Bandhan Bank, because it was beaten black and blue in all of last week, the market is ignoring those numbers that have come in over the weekend. Counter is up 7%. I want to see what IDFC First Bank is trying to do. This will probably be the casualty for today. Remember, each day one stock has been chosen by market intelligence to bash up, and yes, IDFC First Bank is down 10% in early trades, 59 rupees. A quick look at NSE 500 and then we'll get back to Amit. So Reliance high, 1% higher. HDFC Bank in the green. You have ICICI Bank shooting up. Lodha Developers after its earnings is 3.5% higher. I also want to see how Dr. Reddy's is adjusting the stock split of 5:1. Let's just see the Dr. Reddy's price, 1% higher, 1317. So all is well in the world of markets. A gap up initially. Let us hope that this gap up continues today and we close at its day's high. Amit, coming back to you, one very quick word at the quality of comment that is coming in from FMCG giants. In my last 30 years in the market, for the first time I am hearing that the Indian middle class is shrinking, and that is coming from no less than the boardroom of Nestle. How do you react to that?
Well, it's a very interesting observation. I know coincidentally we did a product last year. This was a thematic wherein we put out a very detailed study on saying how India is premiumizing. And this just doesn't apply only to tier one cities. We found enough evidence of even tier two and tier three really moving towards the premiumized products, their aspiration levels and their availability of the products through the e-commerce route, the exposure through social media is all driving this whole surge towards premiumization of the products, whether it is food products, goods, brands, whole lot of things. So I'm not surprised by that. But the flip side of that has been that the income growth at the bottom of the pyramid has not kept pace for the bottom of the pyramid to move towards the more affordable brands, which earlier the middle class was consuming. And therefore, you have this observation from some of these FMCG majors saying that the middle class is missing because eventually you have, in a tank, you have some segment moving up the curve and it gets replaced by new entrants. That replacement by the new entrants is not happening because the incomes at the bottom of the pyramid have not moved up, proportionately, and therefore the middle class seems to be perceptibly shrinking, so to say.
Mr. Khurana, could you tell us between the large cap private sector banks, where would you be really looking to buy at this point in time? We've seen HDFC Bank bounce back from 4-year underperformance. We are seeing now ICICI Bank proving itself in the fundamental numbers. Axis Bank rebounded last week too. How should one be really looking at them? Is there a pecking order that you have between these large cap banks?
We made a basket approach to it, but very clearly, I think the way the numbers have come out, ICICI Bank will stand much ahead of the pack, and it continues to be one of our preferred picks in the universe. We also thought IndusInd Bank numbers, while they had some
Yeah.
sort of concerns built by the market, but I guess eventually it should bottom out late, sooner or later, and the risk return profile that we find from here onwards, considering the valuation, seems to be pretty favorable. So those are the two names that I would put out. Amongst the public sector banks, we were
Yeah.
only graded Bob to buy post the earnings.
Okay.
Absolutely. A wonderful set of numbers coming in from Bank of Baroda, and this is, ladies and gentlemen, one of those stocks that has, of course, fallen from record highs, but the losses are minimal. It speaks about the quality of the bank and the quality of the balance sheet that it has put up. The other thing, Amit, that has happened in the market is this, how should I say, accident with NBFCs. Look at the numbers at Poonawalla, look at the numbers at Credit Access Grameen. Smaller banks have also taken a hit because of either microfinance or the unsecured loans that have, let's just say, hit the balance sheet. In your universe of stocks being tracked at Daulat Capital, which is the strongest NBFC which you are waiting for to correct more and then add?
Well, we cover only the affordable housing finance NBFCs, so to say, and there the asset qualities have held reasonably well. In fact, that was one of the reasons we avoided the pure play MFIs or some of the other NBFC plays, which were having pretty significant exposure to the personal loan segments or the other unsecured sort of modes of lending. In fact, this whole play out, which is turning out in the numbers, is something that we had called out, way back earlier in the March quarter. We remember where we actually downgraded even some of the PSU banks on the valuations, and we raised some concerns that the asset quality, especially on MFIs and unsecured lending, will probably not hold as good as is being guided by the managements. So the 2 quarters down, we see the impact of that playing out. Therefore, we held on our conviction on the affordable housing as a segment. We like that as a play, and considering the overall quality of say the underlying collateral seems to be pretty reasonably good, and the underwriting standards have held on so far so good. We continue to back up that as a segment. But having said that, I think you would probably have to be more realistic in terms of return expectations, because eventually the ripple effect of these developments on the MFI and the unsecured lending will have some negativity, spilling over to the secured part also. I think we keep a pretty close watch over the next 2 quarters as to how it plays out.
Okay. Let me just take your attention to the aviation space, Mr. Khurana. Indigo has come out with the numbers. We've seen losses on account of various factors that have played out. Brokerage houses are now downgrading and cutting the target prices to 3.5% lower in trade at 4,200. We've seen it lose about 12-13% odd in the last 1 month's correction. Is it giving you a long term, when we look at a hindsight, a great entry point for Indigo, because it still remains a monopoly play, it still remains one of the strongest aviation counters that we have seen thus far, which has stood the test of time thus far?
Well, we don't cover the aviation space formally, so I don't have formal ratings on it. But I think at a general level, all I can say is that Indigo as a franchise has done pretty well. In spite of all the feedback that you get on social media, it remains one of the more formidable players in India. And I think the bigger challenge that they faced is on the grounding of their planes, which hopefully should resolve itself over the next few quarters and lead to some better operating leverage. Specific levels I would refrain from guiding, since we do not have a formal coverage on the stock.
Okay.
I believe Vaishali Parekh has joined us. Let's see whether we can see her on the screen. She is our lady luck, and luck is something that is desperately needed in the market. Yes, there she is. Good morning to you, Vaishali. We start this truncated week with the monthly FNO expiry on 8% downtick within the 4 or 5 major indices. Nifty, Bank Nifty, Mid Cap, Small Cap, and any sectoral index that you want to choose. Which is the strongest index?
Very good morning. Yes, I think so. Right now, it's very hard to tell which is the strongest index, but still, so far, I feel Bank Nifty is still quite okay. IT index is still quite okay, but the others have really seen a good beating. So I would say that the bias has turned a bit corrective. Even as far as Nifty is concerned, well, we have corrected substantially right from 26,000 levels now towards 24,000. So still, there is no reversal. Its only hope is that we are coming closer towards a near-term support of 23,800. And if we see a bounce, we could see a bounce coming to 24,500. So that is a view that I'm looking at right now.
Very good morning to you, Vaishali. Good to have you with us. And the Diwali week has started off. Some green is definitely a big sigh of relief after we've seen what happened in the last 4 weeks or in the markets. Do you have any Diwali picks for our viewers?
Yes, good morning, Sakshi. So I think, well, if I would to look at stocks right now, I think BEL has come after a good corrective move. It's taken a good support on Friday. We saw it made a low touching the 200-day moving average. And from there on, we are seeing a good bounce. So I think this becomes a good accumulation as far as BEL is concerned. Then I would also like HDFC Bank and ICICI Bank. So these are the stocks which are technically also very well placed, and fundamentally also we have seen good results coming in. So I would say focus on stock specific right now.
Okay. We are waiting for the markets to open. Amit has to leave, and before we let you go, Mr. Khurana, 3 stocks from the Daulat research table. 1 large cap, 1 mid cap, 1 small cap, where you see the investment structure still positive. Prices may have corrected substantially.
Yeah, I mentioned some of those names. I think iBank, will be, while the price doesn't seem to have corrected, it's probably on the peak. But I think that will be one franchise that I'll look at. Second one will be Paytm, because the regulatory headwinds seem to be going off, and that could be an interesting franchise to look at. It has taken a lot of brunt, but I think the regulatory headwinds are out of the way, and the profitability will play out. Small caps we are still evaluating, so I would probably not put out some names. A lot of earnings are still pending, and we are yet to go through our universe review.
Okay.
Fair point. ICICI and Paytm is what we will live with. Amit, as always, it's a pleasure meeting you, and let's hope we now catch up regularly. Thank you for your time and festive greetings.
Just 1 second before you go, Amit, I have to ask you just one last question, and that's on Wari Energy's IPO getting listed today. I can't let you go without asking you if you have asked your clients to subscribe to it, and what are you telling all those clients who have not got the allotment, even after 80-85% premium listing which we are expecting today? Should one go ahead and buy this one?
Well, we haven't put out any notes, so we will probably initiate the coverage now. But I think the listing was expected to be pretty aggressive. So I would probably reserve my judgment on this. I think one has got to be very careful, because some of these are extremely, they're led by liquidity surge. So I would probably wait and watch, let the prices stabilize, and one can always look at these structural stories at the right valuation.
Thank you so much.
Correct, ladies and gentlemen, the market is upon us, a 100-point gap up. Will this continue? Only time will tell. The first 15 minutes will be very critical. But let's look at the star of the day. ICICI Bank, 33 rupees higher, 1288. I want to see what Reliance is doing. A rupee 15 higher, 1328. This, ladies and gentlemen, is the 1:1 bonus split. Please do not be worried about the price being halved. You've been given one more share. TCS is 18 rupees, 20 rupees higher, 4078. HDFC Bank is in the green, 1744. How about Infosys? 5 rupees, 6 rupees higher, 1868. So look at it this way: HDFC Bank, Reliance Industries, ICICI Bank, and Infosys. These are the top 4 index heavyweights. They are in the green. Let us see how it goes. It's already slipped another 50 points. Okay, what is weak? L&T, 3290, 1% lower. We'll go immediately into the pharma space. Look at the 5:1 stock adjustment on Dr. Reddy's, 0.5% higher, 1309. A very quick look into NSE 500. Okay, Indigo, taken to the cleaners. This is the accident of today. 9% lower on terrible set of numbers, 3976. IDFC First Bank, again earnings led, 8 percentage points lower, 60 rupees 40. Shriram Housing Finance should have split its share 5:1, 5% higher, 3252. I'm not sure why this is not happening. Bank of Baroda, good set of numbers, 2% higher, 244.64. And of course CDSL, 3% higher, 1462. So this is looking good so far. Let's look at the top gainers. Yes Bank's numbers were also good, 8% higher, 21 rupees. UTI AMC, good numbers, 6.9% higher, 1226. Bandhan Bank, terrible numbers, but was beaten black and blue last week, so a short covering happening, 5.7% higher, 178. Inox Wind, strong numbers, 3% higher, 208. And finally, I just want to see one more stock, which is ICICI Bank, 2 percentage points higher, 1281. Vaishali, coming to you, anything that you would want to buy in this bounce, or is this a dead cat bounce?
In a hurry because, well, I'm not sure about the market levels because right now the bias is showing a corrective move, so I would rather wait.
Got it. Well, Indigo, let's look at 8.5%, now 9% lower in trade after, earnings have disappointed on the bottom line, losses being reported, sub 4,000 levels now, 3979 can be seen. No, it's now a 10% downtick, 436 rupees lower in trade. You can see at 3929 now on Indigo as well. Sharp disappointment coming in. Again, we have been seeing this as a trend in this weaker market. Any earnings disappointment is being punished sharply by the D Street as well. We'll come back to Vaishali on that one, but let's see what is actually ticking higher. PSU banks seem to be pulling up in trade, especially SBI and Bank of Baroda has been highlighted by Shell too. We are seeing Canara Bank, PNB, Indian Bank, Bank of India, all of them in thick action. Financial services are also up in trade, about 1% higher for the index as a whole. Several stocks like Shriram Finance, which have already got an earnings upgrade. I think Motilal Oswal has come out with a buy rating and a target price of 4,000, indicating a 30% uptick. Upside from the current levels is last closing price particularly is something that they are betting big on, and therefore you can see a sharp reaction on the positive side. REC, good earnings. PFC also up in trade. HDFC, AMC, MCX, these are the counters that are buzzing. Let's get you also, it's largely the banks, financial services and pharma and IT which are showing us some names. In the F&O space, Bandhan Bank is now taking it away, 5.5% higher. Shriram Transport Finance also up by 3 to 4%. HPCL is another one that's up by 4% higher in trade. Again, here we have a Citi buy call on HPCL with a target price of 420 coming in. Vaishali, in the F&O space, what are you really looking at right now? And the next one will be on Indigo. What should one do?
So, well, I would say State Bank and HDFC Bank, as we mentioned, they're doing very well. So, my focus would be on that and also on Kotak Mahindra Bank because I think the stock is showing signs of improvement. It's holding on to its 200-day moving average. And I think the last week low, what we saw post its results, 1730, acts as a very good support level. So, I would regard that as a strong stop loss below 1730, and I would look for a buying opportunity to look for a target of 1820 to start with.
9:20, ladies and gentlemen. Let's look at the broader markets in terms of the advanced decline ratio. We need to see the strength as far as bulls are concerned. It's not there. 850 highs, 850 advances versus 1345 declines. Sakshi and I track 19 indices for you. Already 3 plus 4, 7 are in the red. led by the FMCG index down fourth of 1.4%. The Nifty PSU Bank is rolling in the green, and that's primarily because of Bank of Baroda. A strong set of earnings coming in here. Vaishali, what is the Bank of Baroda chart telling you?
So, in the PSU sector, we have witnessed two strong banks. I mean, that is SBI and Bank of Baroda. Bank of Baroda, I think the long-term trend has been pretty decent. We have seen good correction coming in, and 230 acts as a very good cluster of support levels, 225 to 230 levels. Currently, post its result, it has formed a good bullish candle, but we need confirmation about 256. So I would say right now I would observe a range of 230 to 256. If the stock moves above 256, it's getting into a strength zone to look for higher targets of 270 to 80 to start with.
Okay, got it. Let's again look at some of the counters that are in focus today again. Poonawalla FinCorp is another 8.5% lower in trade. It's now trading at about 272 odd levels. One should definitely keep an eye out on this one. It's been faltering since last week as well. Apart from this, we are looking at IDFC First Bank, that's lost about 5.5%. IFB Industries, look at that one, about 14% lower in trade. We have ITD Cementation, that's also down by 5.5%. Remember, here there is this news flow that the company will be looking to sell about 46% stake to Adani now, and therefore you can see downtick on this one as well. Several other counters which are lower in trade right now. Indigo is now 10% lower in trade, but let's see some upper, higher moves that we can see. Sirma SGS Technologies up by 7.5%. Dixon Technologies is pulling up in trade. All the three OMCs are up in trade. IOC, BPCL, HPCL, they are also buzzing higher in trade. Apart from the banking names that we have just taken, Amara Raja Batteries is also up by about 3% in trade today. Let's get you to talk about one Amara Raja as well. Vaishali, we have been seeing sharp downticks on across these battery major stocks. Do these levels look attractive to take an entry?
I do think so, because the stock has witnessed good corrective move, and again the indicators are also showing an attempt to bounce from the oversold zone. Secondly, it is also taken as support currently at the 200-day moving average. So if the inherent strength is witnessed, then I think 1250 should act as a good support, and I would look for a trading target to start with, at least for 1350 to 1500 would be the next level. So the immediate target would be 1350, next would be 1500.
924, ladies and gentlemen. Let's look at the Nifty now. It's looking better, 88 points higher. Remember, we'll take the first view on the Nifty after the 15-minute candle. What has happened so far is that all intraday highs have been sold into dramatically, and then the index not only ends at its day's low, it also substantially gives up all its gains. Okay, what is the stock that we would like to talk about? Okay, I think it is CDSL. I'll request Vaishali to take a view, and I think it's a sectoral move. Okay, so all the AMCs and all the brokers are doing well. That's probably because of a strong show by Nuvama, that is the company that is on the wealth management space, as also by UTI AMC. But in terms of sheer trader delight, it's CDSL and to some extent BSE, which is up. CDSL for you, Vaishali, what are the charts telling you?
Yes, so CDSL and BSE have been the all-time favorites of lately. And I think CDSL currently, of course, we saw a bit of a correction, and the support levels were under threat, but right now it's bounced back, and currently it's on a cluster of supports. So I would say 1450 would act as a good support level, stop loss below that. And if we sustain about at these levels, I think this can go towards 1600, 1630.
Okay, between REC and PFC, where would you really look to buy the current levels between these power finances, which have been erstwhile favorites, where Shali, we've discussed so much on them when they were in thick momentum, but after the recent downtick, where do you see promise?
Well, I would say PFC is showing comparatively more strength right now. So I would say the low that we have witnessed in the recent past, that is 426, that would act as the support, and the view further on gets negated if we break this support level. But for now, 426 should act as the support, and 480 would be the next near-term target. So I think comparatively, PFC looks better. I think REC has a good support level at 490. So I would still wait. There is no confirmation of a reversal right now.
Okay, got it. If you look at the broader markets, there are a few names that you can actually look at which are in thick trade. Archean Chemicals is up 13%. Yes Bank and Bandhan Bank have already been discussed on the back of earnings. UTI MC also in the same breath. Kirloskar Pneumatic is up by 7 odd percent in trade today. Shriram Finance we've already discussed. CDSL we've discussed already. We also have Vishnu Chemicals, that's up very far and few between names. Nothing really that we could be discussing. Some chemical names probably, that is a space that probably is showing some uptake. Vaishali, are you seeing any sector-wide move in the chemical space?
No, not really. Nothing to my knowledge
Nothing to
right now.
buy.
And I'm not finding any conviction anywhere.
Okay, got it. And the markets are now turning further volatile in trade. 1.8% higher for the PSU banks. I think that's in thick trade. Financial services, Nifty Bank, private banks, they are in thick shape. And the small and mid caps are actually doing well. 0.5% higher for both of them. Today in the small caps you have Inox Wind after the earnings, that's up in trade. Go Digit again after earnings is up. Ircon International, I think some railway space stocks are also buzzing. IRFC, even IRCTC is buzzing in trade. Anything in the railway pack that you would look at right now, Vaishali, or would you completely stay away with a barge pole here?
So I think we have spoken about these. Most of the stocks have corrected pretty well. So I would say if it's with a long-term perspective, it's good level to accumulate, I mean, just by 20-30%. But if we are looking at Nifty not showing strength, and if there is a further drag, perhaps even to 22,000 levels, then I would be a bit wary of purchasing right now. I would wait to see some stability in the market. But of course, one can never take the exact bottom. So I would say start accumulating in 5 to 10% from here on.
Let's look at stocks where you've already had earnings, and despite the broader weakness in the markets, they are in the green. Let's look at Radico Khaitan, a cash counter, and there was a very, very sharp uptick in volume over the last two sessions, that's Thursday and Friday, and today it's again opening in the green, 1.33% higher. 2298. I hesitate to take technical calls in terms of price targets and support levels in this kind of a market, but these are stocks that should be on your radar. Therefore, you see this very sharp momentum. What else is visible in the markets? This is Bandhan Bank. Terrible numbers, but the stock was beaten black and blue, and this is a swing trade in the making. It's also in the ban, so any move that you can do will be on the long side in the cash markets only. Already up 8.5%, 1421, 14 rupees 20 higher at 182. Now where is the crash coming? Interglobe Aviation. It's broken below 200 DMA, and at 39.38 it is also below, ladies and gentlemen, the June 4th low. So remember what the markets are telling you. Disastrous numbers, all sorts of problems that could come in this marquee stock are right there in front of you. This is the lowest since 29th of April. How much more pain is left in Interglobe Aviation, Vaishali? What are your charts telling you in terms of support levels?
I'll just have a look. Yes, so we have
Indigo
seen
is
a
the
gap
top
down.
traded counter today. Yeah, tell me. Yes,
Yes. So I would say
yours.
technically there is a prominent support at 3,800 levels. But if these levels also break, then I think 35 can be our next possible target.
Okay. We'll also look at the CDSL numbers that have come in, and they are the ones that are prompting this very strong move. CDL is the fifth most active counter. 295 crores have been traded on CDSL, and just let me tell you the earnings that have come in. Just a moment, please. For the September quarter, 322 crores versus an year ago number of 207 crores. So it's almost a nice 40-45% uptick in year on year sales versus 257 crores in the June quarter. So it's both a quarter on quarter rise and a year on year rise. Let's look at the net profit. 162 crores for the second quarter compared with 109 crores in the year ago quarter and 134 crores in the first quarter. So all in all, this is a solid Q on Q and year on year uptick. This is not a stock which is reasonably valued, but in this case you have a very strong show backed by earnings, and this is just let me check the all-time high on CDSL. Remember, this is also a 1:1 bonus adjustment that happened a couple of months ago. All-time high is 1660 and we are at 1480. Sakshi.
Right. Vaishali, let's look at Yes Bank. Of course, very strong earnings that have buoyed the sentiments here. Profit has shot up 145% year on year to 553 crores. NI is up 14%, and this has definitely beaten the street estimates as well. This has been a counter which we rarely discuss with our guests to give their views on. But after this strong show, would you say that this is a stock to really look at and buy, or should one still stay away from Yes Bank?
I would say actually there are a lot of ifs and buts in this stock because the trend has been very low. And we saw the recent low that has been made is 19 levels. So just for a trading perspective, if one has to do it, keep 19 as your stop loss and look for a target of 2,400. The only consolation, see daily chart, it is in deep oversold, and so maybe we can just take this as a bounce back. But weekly chart is still, if 19 levels is acting as a good support level, we still have a formation of higher bottom formation. So unless and until the stock moves about 25 levels and sustains, I would just take it as a trading. I'd rather go into stocks right now which are also showing a lot of strength, like as we spoke about HDFC Bank, ICICI Bank, Kotak Bank technically well placed. I would rather focus more on those than these.
Okay. NBFCs, that's the space to continue to watch out for today. Shriram Finance up 5.5%. You have, other brokerage houses companies like Motilal Oswal, that's up 1.5%. Jojit up in trade as well, 1.5%. You have even the housing finance companies like Canfin Homes also up in trade. Then we have stocks like Muthoot Capital up in trade, Geo Finance, IFL Finance. These are all Aptus Value Housing Finance, 5-star business, all of them up in trade. Vaishali, if you look at this space, which is the counter that appears strongest amidst the NBFCs?
So I would say have a look at Shriram Finance compared to all the other NBFCs. This still has a very strong uptrend, and technically also I would say compared to the way the other stocks have corrected, this is just the long-term chart is still intact. We have seen a nominal retracement right now. So keeping in mind 3,000 as a good support, I think this stock does have a good scope to go towards 3,600 to 3,800 levels.
Okay, the Nifty is slipping, ladies and gentlemen, now just up 22 points. Let's look at the contributory stocks that are impacting the index positively and negatively. First off, ICICI Bank. Even though the Nifty is up just 22 points, ICICI Bank is contributing 58 points to the positivity. SBI is contributing 17 points, Infosys is contributing 10, TCS and Unilever 2 points each. What is pulling the Nifty down? L&T. This is a disappointment. We will be looking at the L&T charts fairly soon. Just 13 points from L&T in terms of negative contribution. Coal India, disastrous numbers. Market is punishing it. 4 percentage points lower. Coal India, 441, 11 points lower. ITC, ONGC, Bharti Airtel are also contributing about 7 and 8 points respectively. ONGC is getting impacted because of the 4 percentage point cut in Brent crude, which is now below 72, and ONGC itself, I believe, has slipped below 200 DMA last week. The price that you see, ladies and gentlemen, is at the same level as June 4th. I repeat very categorically this June 4th price on many stocks, because that was the low that markets hit when the election results went the other way from market expectations. And you can well imagine how the markets are perceiving this current market to be. The top performing index now, ladies and gentlemen, is to some extent the Nifty PSU Bank, and a lot of FMCG counters. Look at Dabur, 0.6% higher at 542. Look at Marico, this is also at day's high. Look at Colgate Palmolive, 1% higher, 3115. And of course you have City Union Bank after that very strong set of earners doing pretty well. SBI, Vaishali, you've mentioned in your opening commentary that both the charts look good, consolidating around 200 DMA. What would your view be on the medium term prospects of SBI? Again, this price is from June 4th lows.
I would say yes. In fact, this bank has not even participated in the recent past, but I would say 760 is a very good support. So one can start accumulating with 760 as support. And once we see there is a near-term resistance coming at around 825, 830 levels. So 760 to 830 should be the range that I would look at. And I preferably would suggest to buy closer towards the support levels, because market is wobbly as we are seeing that. So I would say that would make it also a favorable risk reward ratio. And I think once we see a clarity, the stock going above 830, that would bring in further strength to see a further target of 850, 880 levels.
Okay, a lot of stocks which are declining, but let's look at Indigo again. It's further slipping now. It's 12.5% lower, and 3819 can be seen on Indigo right now. It was at 10% downtick, and now you can see further slippage coming in. Vaishali, at what point does it start to look attractive on Indigo, and where should one go with bags full of money to continue to buy on this one if one has a longer term lens?
So I would say Sakshi 3500 would act as a good support. I think that's the level that one should look at for getting into the stock.
Okay, got that. 3500, keep an eye out on that one as the stop loss for Indigo viewers. But several others which are dragging in the overall broader market scenario. Voltamp Transformers remain. Remember, this was one of the stocks that was in thick momentum right before the downtick and the downturn in the market started. The stock is now down sharply lower, almost 13% lower in trade. A recently listed stock, Tatwa Chintan Pharma, is also down by about 13.5%. IFB Industries another 14.5%, 15% lower in trade. You also have stocks like JBM Auto that are correcting about 6.5%, another one of the favorites in the auto ancillary pack. Intellect Design Arena is 5.5% lower in trade. Ashapura Mindcam is another one that's up 9%, and that's down 9% in trade. These are all the stocks that are sharply lower in the broader markets. Vaishali, anything that catches your attention here that should be really looked at for bottom fishing?
No, not really, Sakshi, because right now, currently, I'm seeing Nifty as well as so many stocks. So now there's also another way of looking at it because if you see, so many stocks are already trying to breach the 200-day moving average. So if that is so, and if these stocks are going to break the 200-day moving average, that means we would look at further corrective possibility. So I would be still quite cautious. I would not buy in a hurry.
Okay, but one stock in the broader markets that's hit a 20% circuit on the positive side, Orient Electric. After the Q2 numbers came in, the net profit rose by 43.4% to 10.4 crores, and we've seen revenues also increase by 17%, and therefore you see the stock hitting a 20% uptick now, 252 odd levels. Apart from this, let's look at what else is continuing to be in thick trade. Shakti Pumps, another 5% higher in trade today. That's also buzzing strong. Then is there anything else that we would like to mark? Maharashtra Seamless is up by about 7% odd. Then you have stocks like LG Rubber, that's also buzzing in trade. Anything in the auto ancillary pack, Vaishali, that you like in the positive zone?
We first of all, I would look at the front line, that is Samvardhan and Motherson. So
Hmm.
that also has got into a corrective move, and it's coming close to a support level of 180. So that is a level I would look at and then see if it's sustaining or no. But for now, nothing. No, not at all.
Okay.
942, ladies and gentlemen. We are now negative on the Nifty. So this is what is the real issue, which is that for some instance you see a gap down, a gap up on a rare occasion, and then that gap up is sold into by call writers, and that is exactly what has happened today. Let's look at the bank Nifty, which is enjoying a good outing today, 340 higher, and that's primarily because of ICICI Bank and of course Bank of Baroda. Let me just point this out to you. ICICI Bank is contributing 317 points to Bank Nifty's uptick of 318. SBI is contributing 80, Bank of Baroda 20. What is pulling the Bank Nifty down is Axis Bank and HDFC Bank. Nothing to be worried there, but the point I'm trying to make is that as Vaishali says, there is no strength on the long side. And once there is no strength on the long side established by good quality traders, they press further shorts once the Nifty breaks the early morning opening low, and from then on the selling pressure accelerates. What is the sensible way out? I wish I could say anything positive, but again what I am doing is buying SBI Nifty ETF on every declining day. So if you have a certain amount to invest in this falling market, break it up into 10 equal parts and buy every other day, which is in 20 days this pain should be out, if at all. And all those 10 equal installments should be purchased every other day, so that if there is a lower low, you buy the market cheaper. If it is a higher high, you average higher, which is good. So this is how it works as far as prices are concerned. And there is a question that is coming in from Mr. Dinesh Sharma on YouTube. Vaishali, he wants to know the outlook on Philips Carbon Black PCBL, which is now at 423, trying to test its 100-day moving average. What are the charts telling you?
Well, that too has also gone into a corrective move. So let's see. The retracement has taken quite a bit. So I would say 370 should be the support now from here on.
Okay. Another one again is on Adani Enterprises. Piyush Jha from our YouTube viewers is mentioning कि सर आज Adani Enterprises ऊपर जाएगा क्या? Vaishali, any luck there for Adani Enterprises today? Right now it's trading 0.3% lower at 2684.
Well, if at all a bounce little bit, but I don't think so because Nifty is also not holding on. So I don't know. The bias is corrective. So just for a bounce back of 1.5% or so, maybe.
Okay, real estate, it's now the gains are limited to just a few handful stocks, especially DLF after the earnings, which is holding on to 4.5% moves, and Godrej Properties, which had been outperforming even last week, is holding up about 1% higher. Vishali, would you be a buyer on DLF at 811?
So actually for short-term trades, yes, I would probably with today's lowest stop loss, I could get into the stock and just look for a target of 825, 830, but otherwise nothing concrete.
Okay, nothing concrete right there. DLF right now is the top mover in the Nifty Next 50 list, and therefore.
So I'd rather draw your
yeah.
attention to a few stocks actually which are having a good trend in spite of all the choppiness. One is National Aluminium.
Okay.
If you see, it's quite unaffected by the way market has been correcting, and I would say 215 acts as a support. So I would say 215 as support and look for a target of 230 to start with, and then we can have a relook. If it's moving about 230, then next target would be 240. The other stock that also I'm looking at is Piramal Pharma. So just last week we saw that Piramal Pharma gave a breakout. It got into the all-time high position. So that means that is the stock is saying something. Sorry. So I would say 230 acts as a support and 260 to 280 would be the target. So these are the stocks which are having a good firm stock uptrend. So I would rather focus on these stocks which are holding their fort very well.
Okay. Right.
Sakshi, I'd rather focus on a very strong cup of good coffee filled with sugar so that it can give you a kick in the brain.
I'll join
कुछ
you
नहीं
for
हो रहा
that.
बाजार में सब ऐसे ही बैठे हुए हैं and Vaishali, what will happen, some poor
Yes.
investor will buy National Aluminium and that is the day it will start cracking. Ditto
Yeah.
PPL Pharma. आप
Yes.
2 शेयर लेके देख लो.
सही बात है. So that is
You
what
know,
I'm saying.
it's
It's
best in
support
these
दिखते नहीं.
times. Yeah. In times such as these, it's best if you have been bitten by this stupid habit of buying and selling repeatedly, then stick to funds.
Yeah.
Stick to a lot of quality funds on the flexi cap side. Look at the balanced segment because whether we like it or not, if not in 2 months, then in 4 months you will see rate cuts happening in India.
Yeah.
And this is when the banking, this is when the government bonds will start rising because interest rates will fall, and that's the time to look at balanced funds. So all three of us, Vaishali, Sakshi and I, 6 months later will be remembering this time कि देखो कितना बाजार गिर गया था, तब हमारी हिम्मत नहीं हो रही थी इंडिविजुअल स्टॉक्स लेने की. लेकिन बेस्ट वे लेडीज एंड जेंटलमैन इज to look at that equity diversified fund that you wanted to buy but you didn't because money was short. Put in that extra SIP for the month of October. Remember, bad times and good prices don't come together, and good prices and good times don't come together. This is the underlying unwritten rule in the market, that good prices, which is falling prices, come at bad times. And across the world, you have nothing but bad happening. So use this opportunity. Have faith that Indian markets will rebound. We don't know what the low is, but what can we do in the low? Not lose our brains and keep our heads firmly on our shoulders and buy quality. That is the only thing that will hold you in good stead. And ladies and gentlemen, please remove this idea that each year the Nifty will appreciate 21%.
Yeah.
Remember, till September 30th, the Nifty was up 21% year to date. Dow was up 9%. Dow is now up 11 and Nifty is down from 21 to 11. It looks bad, but let us see how it goes. But mutual funds and ETFs, more mutual funds than ETFs should be the way forward for sensible investors. Sakshi.
Right. And Vaishali, HPCL is something that we can look at. It's outperforming the OMCs, now 4.8% higher in trade. What would you say at these levels on HPCL? Does it give that opportunity to stick to the buying zone today?
No, not really. I mean, the stocks are showing weakness. It could
Yeah.
be just a little bit of a bounce, but we are not seeing any strength. बट शैल जी आप देख लीजिए 2% तो हो गया नाल्को में नेशनल एल्यूमिनियम 225 ऑलरेडी
वैशाली आप मेरे कहने पे एक शेयर ले लो. आई एम सेंडिंग 225 रुपीज टू यू. इट विल क्लोज लोअर.
नहीं नहीं इंट्राडे के लिए बस जस्ट ये ऑब्जर्वेशन था नथिंग मोर
Correct. I know, of course. While you mention the good prices on markets, but remember, I heard this from a very dear friend of mine. She said that we may ignore these very sharp falls and very sharp jumps in prices, but remember, the one person who's calculating all PE, all price to growth, all excessive valuations is the market. It calculates everything. We may ignore it. So that calculation is now working overtime, and it has presented its bill to you in the form of a sharp fall in prices. But as they say, that this too shall pass. We've seen fantastic days, all three of us in the market.
Yeah.
We are seeing some dull days. It's okay. The Bank Nifty meanwhile is up 518 points and the Nifty is back in the green. I am so hoping that we will close in positive territory today. Sakshi.
24,220 in front of you on the Nifty, a 43 point of an uptake. Very, very volatile market right now. Where is this buying really coming in from? It's the PSU banks, it's the banking space at large, even the private sector banks that are supporting the sentiments. IT is now pulling up into the green. You have the mid caps, some green can be seen on that front too. So these are the pockets that are actually buzzing in trade. Bandhan Bank now up 9.5% higher. Yes Bank up 8.2%. HPCL. Vodafone is pulling up in trade 3.4% higher, almost 8 rupees now on this one. NMDC is also pulling up from the mining space 3% higher. Indus Towers is up by 2.2%. Bharti Hexacom. So I think it's the telecom space that's actually buzzing. Vaishali, anything that catches your fancy in the telecom space? It's been
well it always yes so it
trashed.
always has to be Bharti Airtel. I would rather go for Bharti Airtel, and I think even Tejas Network we were talking about sometime too is also in the telecom, right? I'm not too sure.
Yeah.
Yes,
Shell
so
has been talking about it right from the time it began the move within that telecom buzz that we started to talk about. Yes.
Yes, so I would say Tejas Network is pretty decent as far as statically we talk about. Bharti Airtel is good, so these would be the stocks that I would focus on.
Okay, stick with Bharti Airtel, 1659 and Tejas Networks, two of these stocks. Yes, Shell.
Sakshi, I think Vari Networks, my apologies, Vari Energy is getting listed today. 34-year-old company, the largest maker and exporter of solar modules, a very strong listing, a very strong subscription. I believe the best so far in terms of amount that was raised via oversubscription, and a very strong order book, 19.9 gigawatts. The entire management is right there on the screen, ringing the bell at the National Stock Exchange, and you have the management, Mr. Doshi, right there in front of you. The gentleman on your right is Mr. Doshi. A very strong order book as far as prices are concerned, and of course they've used this fundraising to raise another project and a new plant plus pay off debt. So this is what we are hoping for, and the IPO was priced fairly aggressively, 1427 to 1503, and 1503 was the IPO price. 4600 crores they have raised. Let us see how it lists.
94 points higher on the Nifty, 24,275. You can see a recovery happening from the lows on the Nifty, and probably it is with the hopes of Wari giving you probably multi-bagger listing gains right on the debut. So that is probably fueling in. We'll take it whoever it is. 100 points now higher on the Nifty, and 24,282 is what we can spot on the Nifty. PSU banks are now 2% higher. The Nifty Bank is sharply higher in trade, 1.1%. That's the key contributor to the gains on the Nifty. The Nifty Bank, I think, is now up about 600 points in trade. Look at the Nifty, it's already recovered 140 points from the day's low in trade as well. And metals, like Vaishali had clearly pointed out, is the one that's also taking it away. Now Hindustan Copper also 3% higher, NMDC, Nalco, Welspun, we have Hindustan Zinc, Steel Authority, Vedanta, all of them up and about. The index itself is up by 1.1% higher in trade. 3 minutes remaining before we will shift focus to Wari back to see how the listing really happens. Remember, it was over 100% kind of grey market premium that was being indicated a few days ago. Today it's up about 81%. So let's see how the listing finally really takes place on that one. On the markets, banks, metals, we have even the mid caps now pulling up in trade, about 0.5% higher for the mid cap index. And again, these are the banks which are supporting the sentiment on that one. Consumer durables, autos, ITs, stocks also now pulling up in trade right now. Vaishali, what would you look at in this bounce?
Well, so I'm looking at, actually now I would look at few of the pharma stocks also, like example Cipla, even Ambuja has its results today, but I think technically the correction has been done with. So even Cipla, it's sitting on its 200-day moving average after the good high of, I think, 1700 levels, and now sitting at 1482. I think these all look quite good for a bounce back. Even Mahindra and Mahindra today is showing promise. So yes, these are the stocks.
Okay.
Yes, and Sakshi, what has happened is repair. Look at Hindustan Unilever, look at IndusInd Bank, look at even Indigo. All those very, very sharp cuts are now getting purchased into. We'll very quickly get to Wari Energy, but all I'm trying to say is that sensible people are getting back into the markets. Let's hope, even if there are some other red days, but probably below 100-day exponential moving average, the worst might be behind us. Again, I repeat, look at quality ETFs, look at superb quality, equity diversified, large cap funds, balanced fund and flexi cap fund. Only these 4 segments you should be looking at to add as far as prices are concerned. Just a minute to go as far as the Wari Energy IPO is concerned. Let's hope it injects fresh energy into the market. Believe me, it's much, much needed. Sakshi and I have got sick of talking about falling stocks and rising FI sales over the last 22-23 trading sessions. Bhai Diwali hai, kuch chalna chahiye bazaar mein on the long side. Okay. Okay. The Wari Energy price should be with us.
I think 25.21 share. 25.21, a 67% premium listing, I believe,
okay.
Shail.
Wonderful. So this, ladies and gentlemen, is exactly what the grey market was telling us. 2500 was the price on GMP. Let's look at how the first 10-15 minutes lapsed. But a wonderful, wonderful listing, and let's hope it brings good cheer not only back into the IPO market, which was slumping because of Hyundai's weak listing, and of course the sell-off. 640 points higher on the Nifty Bank, 100 points higher on the Nifty. I have always said Vaishali is our lady luck, and that's the reason, ladies and gentlemen, we have a green tick. Sakshi.
Absolutely. So there you have it. Vari is definitely the one that has beautified the stock market screen right now in green, which we rarely see these days. So right now it's 2317 as the level on Vari, but we are definitely better off from what we had opened at. 24281 right now on the Nifty as well. I think it's a good way to end our show as well, about 100 points higher on the Nifty. Well, Vaishali, thank you so much for being with us on this show, and we will hope that this screen stays as green and gets greener by the closing hour of the day and through the course of this entire festive week. Vaishali, we hope that you have a great festive season, and both Shail and I believe that you can bring in more lady luck to us from this Diwali onwards until the next Samvat as well, while you will be with us on Business Today Television. Thank you so much.
Definitely. Thank you for having me, and best wishes to all of you.
All right. Thank you so much. And with that, viewers, we wrap it up on that on Market Today's morning edition. But do stay tuned. We will be continuing to get you all the market moves throughout the course of the day. So don't go anywhere. Business Today Television is your space to be at. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is BTS, that's Behind the Scenes, a show where we share a sneak peek into the latest edition of the Business Today magazine with all our viewers. And this one is going to be truly special, not just for us at BT, but also to every Indian out there, because this issue is dedicated to the passing of a titan, Ratan Tata. Krishna Gopalan, the executive editor, is joining in on the show with us, and he's the one who's covered the larger than life of Ratan Tata in this edition, and he's going to be helping us understand all aspects of how the Tata Group changed for the better all through the reign of Ratan Tata and what's next going forward from here. I'm also joined by Asta Oriel, who's a correspondent with us who covers auto space, and we'll also be sharing some more updates about the buzzing EV space in this special show as well. And now, to show you a quick glimpse of the cover issue that we have right here, I have got my hands on my copy, and I'm sure you guys can also go out there. It's already on the stands and you can grab your copies too. This is all about the house that Ratan has built. That's the house of Tatas. Krishna, coming to you. Thank you so much for taking the time out. And of course, this one has been a most pleasant read that I have had. It gave so much insight about the salt to software conglomerates bigger than life that I'm sure all the viewers will also enjoy reading. But give us some sense as to what can one really expect for all those viewers who are yet to buy their copies right there. We all know how Ratan Tata was. He was a visionary leader, the best example of philanthropy that was in front of us, a role model for all the entrepreneurs, and just right at the top of India Inc. He really felt strongly about India, and his passing has definitely left a void in the Indian business realm as well. So let us start by understanding from you about the past first, where R&T, as he was popularly known as, came into the picture. Tell us, how did he really go about setting the house of Tata in order, and was it easy or very difficult for him to really prove himself right there?
Okay, thank you, Sakshi. Lovely to be here. So I'm just going back to 1991. He took over in March after the passing of JRD Tata. Understandably, very, very large shoes to fill. To be fair to Ratan Tata, it's not as if he had a fantastic track record himself. He ran two companies Nelco and Empress Mills, and in all honesty, not with any great deal of success. So there was a sense of apprehension, and if I may say so, a level of cynicism also about the young man. I'm using the word young deliberately. He was all of 53 when he took over as Tata chairman, chairman of Tata Sons in 1991. The Indian reforms process was still 3 to 4 months away, and when he came in, he sat with a group of consultants to understand where the group was positioned, where it needed to be, and what it took or what it might take to get there. A couple of points stand out quite clearly. The strategy adopted till the turn of the century, I'm breaking it up from 1991 to 1999, was to let go of a few businesses that he believed wasn't good enough for the new India. Of course, and all of us know one of them was Tomco, Tata Oil Mills Company, which had brands like Hawam soap and detergent powders and all of it. He let go of that. He sold that to what was then called Hindustan Lever Limited. Shut a whole lot of businesses, but figured out a few things. One, if he had to be accepted, he had to take care of the regional satraps. And that's a tricky one because they owe their sense of loyalty to JRD Tata. I'm speaking of folks like Rusi Modi, the boss of Tata Steel, Darbali Seth, who ran Tata Chemicals, and Ajit Kekar, who ran Indian Hotels. In all honesty, in all fairness, given the fact that they expected to take over, or at least one of them expected to take over at some point after the passing of JRD, it did come as a rude shock to them that they had to report to a person who's much younger and who was being viewed as somewhat of a greenhorn. So he had to take care of that. So the first 8 to 10 years was in really taking care of the satraps, letting go of the businesses, and then coming to the problem, coming to the opportunity or the challenge in terms of getting Tatas ready for the next decade. He demonstrated a sense of toughness, a sense of polite firmness, if I may say so, in terms of having it his way, let go of these people, assert his position within the group, let go of key businesses, and stumbled upon something very interesting, that the group actually did not have a common logo. So the whole sense of unification or trying to understand what the group stood for became an opportunity and a challenge for him, and initiated all these at the same time. To my mind, a person coming in from a background that he did, walking into a multitude of challenges and setting the house in order would stand out as one of his most remarkable achievements.
Absolutely. Now also, Krishna, he was also known for his big, bold decisions that for the first time probably Tata Group was seeing, as a whole, and that greatly also helped the Tata Group get global recognition, so to speak. Talk to us about some of these big, bold decisions. How many of them really proved out to be, something that was seen as a visionary step that really took Tata Group to a stage that was not imagined that time?
It's very apparent, Sakshi, there's one thing that's very clear. He liked the word scale, and he believed that if an industry or a business did not have scale, it would be difficult for India to stand out in the modern world. And he took the first step as far as scale is concerned through a company called Tata Tea, which eventually became Tata Global Beverages, went through several avatars, and today exists as Tata Consumer Products. He went out to England, bought a company called Tetley, and for about $500 million, a huge amount of money at that point. It's still a big amount, but you must understand this was in 2000. It is the single largest outbound transaction by an Indian company. It's not so important for the money, but the fact that he was buying out a company 4 times its own net worth. So the buyer was actually swallowing a crocodile, if I may say so. And that was a tricky one. He bought that, gave him confidence, once that buyout started to work, and then decided to flex his muscles quite literally. Tata Motors a few years later went out to Korea, picked out the commercial business of Daewoo, and then Tata Steel made a couple of interesting moves. They bought over Nat Steel in Singapore, bought over Millennium Steel in Thailand, but nothing, I repeat, nothing was ever bigger than what took place in 2007 when Tata Steel went out and picked up Chorus. We've spoken about that in the story, where the whole attempt of R&D was don't think of the small buyouts, think big, think scale. Chorus, again, like Tata Tea, was a company 4 times the size of the buyer. So Tata Steel, if you remember right, was about 4.5 million tons in terms of capacity. Chorus brought forth to the table 18 million tons. And at $12 billion. So from $500 million in 2000, he was now at $12 billion in 2007. He had to raise the money, had to play the global game, and just a couple of months later, Tata Motors went out and bought Jaguar Land Rover from Ford. And the sense of quiet firmness became apparent through this whole journey of going overseas, more specifically taking the inorganic route.
Right. And when we talk about these big, bold decisions and of course how it leapfrogged Tata Group right there into the global brand, none of the journeys of the most inspiring people that we have always talked about have been sans any failures. Do talk to us about some of the biggest lessons that were learnt along the way. Any of those decisions that probably Mr. Ratan Tata would have regretted?
Nothing is more obvious to me than the case of Chorus. There were two bidders at that point. Tata Steel was one, Searson of Brazil was the other bidder. And a lot of people are quite cynical about the buyout of Tata Steel. But to be fair to Mr. Tata, I think the global financial crisis that hit all of us in mid-2008 was a black swan event. So the problem with that is China accounted for about a third of global production, and suddenly the glut of supply resulted in the collapse of the global steel market. Prices went downwards, and Chorus, with its plants that weren't necessarily well run, the whole idea was to buy Chorus, turn the asset around, but the global financial crisis turned everything upside down for the group. Tata Steel finally had to face a remarkably difficult scenario, loss-making businesses, a slowdown in the overall business globally, and the collapse in steel prices. Nothing could be worse than that. That's one as far as Tata Steel is concerned. Of course, as all of us know, the whole focus of Tata Steel now has been more towards the domestic market. So that itself became, I think, an example of a strategy that could be flexible as and when the moment deserved it. Even for JLR, great start. The global financial crisis again hit all of us in terms of discretionary spending, and people starting to wonder why anybody would actually go out and buy an expensive car. But look at Tata Motors today. The whole success journey in terms of passenger vehicles, in many ways, the success of that can be attributed to the lessons that they picked up courtesy of the buyout of JLR. It's not as if we don't see JLR vehicles in Indian roads today. That itself is testimony to the fact that he did see a market for each of the Tata companies, not just globally but in India as well, because at the end of the day, India was the world and India led the global economy, and he lived by that tenet.
Okay, and once we have accepted the fact that he is no longer with the Tata Group to really lead it from the front, all eyes are now on Noel Tata, and Krishna, and we do know that he's been appointed as the chairman of Tata Trust that actually controls 66% of Tata Sons, and the question is, how well will he be able to take the legacy of Ratan Tata going forward? What is it that we should be really now expecting from here on for the Tata Group as a whole?
I think Noel Tata has made his name in the retail business. So you look at Westside, look at Star Bazaar, look at all these formats. Noel Tata has really kind of carved out a clear niche for himself. What is perhaps not really known is the fact that he sits on the boards of Voltas, Tata Steel, and a whole host of other companies within the group. Noel Tata is 67. He's been low profile, known to be very sharp, known to be a tremendous people's person. In one sense, his elevation as chairman of Tata Trust was not completely unexpected. It also means that the succession within the trust part of the story is now clearly in place. As you rightly mentioned, given that they own 66% of Tata Sons, the company which is a private holding company of the group, every big ticket decision of the group will now have to be routed through Tata Sons first and then to Tata Trust for the final sign off. So the trust will continue to be powerful as far as decision making is concerned, but most importantly, it places Noel Tata in a position of strength now. How that's going to play out is going to be absolutely fascinating. In 2022, there was one amendment to the Article of Association where they said a person cannot hold two positions, meaning the chairman of the trust and the chairman of Tata Sons. So Noel Tata right now remains the chairman of Tata Trust. Sons, of course, is N. Chandrasekaran. We will need to keep our eyes open on how that relationship works out and the role of Noel Tata in the future. But one thing is clear, the succession plan having been laid out with such level of clarity and firmness, and most importantly, alacrity, because it happened a day after Mr. Tata's passing, indicates a certain sense of direction that the group is taking.
Absolutely. Well, thanks a lot, Krishna, for giving us all of those insights. That would have definitely encouraged all our viewers to really go out there and do that in-depth study, because the story of Tata Group, both past, present and future, will really give you that understanding of how India has been, what are we going through, and what do we see going forward from here. Because remember, Tata Group is a huge conglomerate, like I pointed out, from salt to software and now even the skies. There is a lot more that will define the way various industries in Indian economy will shape up going forward from here too. I'm sure this is going to be an interesting read, and you don't want to miss this one for sure. So go out there and grab your copies. Let's now go across to Astha, who's also on the show, and she's the one who covers the auto space, and this is the one where a lot of buzz is being seen, especially the EV space. And what she is writing on is how an electrifying war is now brewing, as we are going to be seeing and staring at an intense competition in this space going forward. Asta, so as the race for electrification heats up, how do automakers plan to bring price parity between ICE engines and EV models? I think that's the crucial question that everybody wants to know an answer to.
Thank you, Sakshi, for inviting me. First of all, we need to understand that, when we talk about electrification, Indian government has a target of 30% electrification. And while some automakers like Maruti Suzuki and Mahindra are, slightly behind other automakers, but their plans are intact with how they are going to forge the electrification journey. So when I discussed with automakers how they are planning to bring the price parity down between ICE and EV models, the first thing that all automakers are focusing is localization, because battery packs or lithium ion battery cells account for 30 to 40% of EV's cost. So now the focus of automakers is to get as much localization as possible in India. Second, government incentives such as PLI schemes is really going to help automakers in bringing the price parity between ICE and EV models. Also, with only 5% tax GST for EV models as compared to ICE and hybrid models, it is going to be beneficial for the entire EV ecosystem to bring the price parity between ICE and EVs.
So how the participation of more automakers will now help India to become a giant EV hub? Do you see that happening?
Yes, Sakshi, because recently even Ford has announced that they are returning back to India after 2 years of exiting the Indian market, and their focus will be to manufacture and supply EVs globally. Along with this, automakers such as Maruti Suzuki, Mahindra, Tata Motors, they already have plans to export EVs around the country, around the world. So this will be a huge opportunity for India to become a EV global hub.
Okay, right, all right. This is going to be an interesting story to continue.